Major funding for this program is made possible by grants from HSH Nordbank New York Branch and First American Title Insurance Company of New York, Perfect Building Maintenance, Greenberg Traurig LP, the Moynihan Group. Additional funding for this program is made possible by grants from Antares Real Estate, Arbor Realty Trust, C.B. Richard Ellis, Cushman & Wakefield, Fremont Investment and Loan, Massey Knackle Realty Services, Muss Development LLC, Rosenthal & Rosenthal Inc., Signature Bank, Stonehenge Partners, Swig Equities, the Engel Berman Group, the Wickoff Group, Titan Capital, YL Real Estate Developers.
Welcome to the Stoller Report. My name is Michael Stoller. New York City is very resilient, especially Lower Manhattan. And I remember 5 years ago, 6 years ago, 2 years ago, no one really thought that Lower Manhattan would really come back this well. Today I have three gentlemen who really know quite a bit of what's happening in Lower Manhattan, many of them who've been involved with Lower Manhattan for many, many years. I'd like to introduce Dan Blanco, principal at Broad Street Development, a returnee in many times on my show, and I'm Building in New York, Bill Rudin, president of Rudin Management, and last but not least, Jano Lieber, the project director for Silverstein's Properties World Trade Center Development. Bill, you were with me, I think, on my first show coming to TV, and we were talking about Lower Manhattan and what's happened. Could you see the change that that Larry and Jano would be getting rents today of close to $70 a square foot in Seven World?
Well, we always felt that if all the right things were done post 9/11 in terms of infrastructure, transportation, tax incentives, residential development, retail development, that the office market would continue to would grow and expand, and we would hopefully see rents not at the levels that we're seeing now, but close to it. We had confidence that those things would happen in terms of rents when and if the infrastructure was put in place and the government did their job.
But part of the infrastructure is not in place yet. I mean, we were joking before the show that you go down to Lower Manhattan, it's a construction site. I mean, you walk on Broadway where it's difficult to maneuver.
Well, I think we all have slightly different perspectives, but I think the fact that tenants feel confident. Today we were at the announcement that I think the first time the mayor of New York, Governor Spitzer, Mayor Bloomberg, Governor Spitzer, and Governor Corzine were at a press conference together. They were there, why? To announce that the Freedom Tower and the whole project of the redevelopment of the World Trade Center site was going forward. That was a very, very important announcement. The Port Authority is about to let $1 billion in contracts this week to move the project ahead. So I think the people feel confident that things are happening, and there may be some short-term pain, but that is why people are coming downtown, because they know in the long term that when the Trade Center is done, when the transportation is done, when the parks are open, when the schools are open, when the restaurants are open, that downtown will be better than it is today. And it's not too bad today, but we're going through sort of the short-term construction pains that are happening over the next few years.
Jano, a year ago, Larry had one lease out, 5,000 square feet for American Express. What's happened? I mean, last year you signed a couple of leases.
Well, last year we signed a lot of leases, Michael, as you know.
I was only
I think the 5 of the 10 largest leases done in 2006 were downtown, and Seven World Trade had several of them. The Moody's lease, which is taken in excess of 600,000 feet. And they're looking maybe at some expansion opportunities. The Moody's lease, I think, has given everyone a sense that downtown is and is going to remain the location of choice for world-class financial companies. The commitment that Goldman Sachs has made to build their 2 million square foot building, new headquarters building right across from Ground Zero in Battery Park City, in the adjacent to the World Financial Center. The other commitments that have been made to downtown, not least the agreement among all parties about how the World Trade Center is going to be developed, has given tremendous confidence and momentum to downtown. As Bill said, the construction that's underway, while disruptive in some ways in the moment, is a sign of progress. It gives everyone a sense of momentum, and that momentum is carrying us forward. The other thing that happened in 2006, it's no secret to you as a leader and student of the real estate market, is that what is going on in Midtown has forced companies to look, first-class companies must look at downtown when they're turning their leases. The opportunity downtown is to save $20, $30, $40 a square foot, and sometimes more depending on the incentives. So that has put us in a position to compete for virtually any company that's out there in the market.
Dan, you and your partner went downtown, bought a couple of buildings. Why'd you go downtown? I mean, Bill's family has been there for years. Larry has been there with the old 7 World Trade Center and 120. I mean, why two young Turks, as one would say, make a commitment to Lower Manhattan?
It's a good question. The basis of our migration to downtown was basically twofold. The first is that we knew the marketplace extraordinarily well. We knew the tenants that were in place. We knew the different dynamics, the players involved. And the second was, has been kind of tossed around before, but talked on the periphery, is this value downtown. There's value in the properties. If you look at a snapshot of New York City real estate, the largest transactions per square foot, the basis of them are Midtown transactions. You're going to the $1,000, $1,100, $1,200 a foot range. There's still an ability and opportunity for young Turks such as me to enhance asset value at prices that are not, to coin a phrase, in the nosebleed seats.
Right. I mean, last year you bought, what, one building?
Right. The year before we bought a building.
Okay. And what did you pay for the building per square foot? I mean, I'm just trying to give my viewers and everybody.
Sure. 55 Broadway bought it sub $300 a foot range. That
right.
Now, in retrospect, seems like a great buy.
So if we take a building that you paid $300 sub over there, and Bill, you know Midtown better because you have properties all over the city. Now, that type of building in Midtown in today's market would sell for $700 a square foot.
Yes, that's right. In April, my partner and I bought 370 Lexington at sub $500 a foot. It's a 300,000+ square foot building on the confluence of 41st and
But here's my question, and I think Bill can answer it, and also Jano.
Right.
You have tenants at 370 Lexington Avenue. You have tenants right across the street at 355 Lexington Avenue.
Correct.
You also have tenants at 345 Park Avenue. Larry has buildings over there. What do we have the same tenants, or who's migrating downtown? And what's the difference?
I see, to kind of dovetail on some of Jano's comments, the meetings I have with tenants, the ones that, if you look traditionally at what drives New York City real estate, yes, it's the wonderful 600,000 behemoths that Moody's is, but it's the 5,000 and 10,000 square foot tenants that drive the marketplace. Those tenants, when their leases roll, cannot afford to pay $65 and $70 a foot. Fundamentally, the principals in that organization are sitting in that space. So they can't afford a 20-25% increase in their rental rates. So naturally, their migration is going to be downtown, where there's still a value-added opportunity with guys like us can build them nice space, and they'll come down here. That's a real reason. That's what I'm seeing.
What we're seeing, and we talked about before the show, our building in Tribeca, 32 6th Avenue, sort of like, in my mind, the microcosm of what's happened over the last couple of years. 2 years ago, actually 4 years ago, we lost a lot of tenants in that building in the telecom bubble, Global Crossing, MCI, and we were left with about 300,000 feet of space. Landmark building, beautiful. We spent a significant amount of money putting infrastructure in, technology, all new systems, and we sat there for a couple of years without being able to rent the space. We repositioned it in terms of we went after normal office tenants. we then all of a sudden made a deal with an Italian TV network, RAI, because their rent on 55th and 6th Avenue was going from $30 a foot to $65 a foot. They couldn't afford that. They came down to our building, made a deal in the low 30s.
Michael, yeah, that's 100% increase in their rent.
And so that sort of led to all the other tenants. They're all international companies. You asked, what's driving the market? It's international companies who want to be in New York City. It's important for their business to be in New York. If you're a global company, you have to have a presence. So we got BBH, a British advertising agency. We got Globo, a Brazilian TV network. We got Cambridge University Press. They all came and they were all increased their space probably by 15, 20, 25%. They were getting good value. They were getting the infrastructure. They were getting a great location, pretty good owner, I think, and but they were growing. They like what the mayor's done in terms of running this city. They like the excitement of downtown and the perspective of seeing development happening. So all those things combined, is helping fuel the downtown recovery, and in terms of finding value that they can still be in New York City, in Manhattan, and having affordable space. We lost the deal the other day because at high, our rents are now in the low 40s. The tenants said we can't afford that, and so they're looking for other alternatives.
But and I think that's the interesting point. For years, for many years, Lower Manhattan has been the low-cost alternative. If you want to be in Manhattan, that's been the low-cost alternative, and that continues to be that. I mean, Darby & Darby, a law firm who's been in Midtown all their time, hey, the partners look at the numbers, and they say, hey, I'm a partnership.
Right.
If I'm going to pay $75, $80 a square foot, and I'm going to go even to your building at $45 net, hey, that's my bottom line.
Yeah,
that's what,
That's a very important point, is that we're in addition to the kind of international companies that Bill's talking about, we're seeing a lot of these partnerships where it goes right to the partner's bottom line, law firms, accounting firms, and otherwise, because they can have a black car service for every attorney in that firm to go to and from home and still come away with a lot of benefit to the bottom line if they come downtown.
I mean, on that point, Ken Swig, just as a cute aside, once tells a story about this law firm who went to see him, and he says, I'll buy you a limousine because the difference, the savings is so much greater.
Yeah.
Well, it works for some firms, but I think what also you talk about, low cost alternative. It's not necessarily just low cost; it's the quality of the space. Because buildings like 7 World Trade Center or 32, even though it's a 67-year-old building, has it's brand new inside because of the amount of money we put in. It's the quality of the space too that these companies are finding. There aren't too many new buildings that have the infrastructure at the affordable numbers.
But I agree on those two buildings, and I also agree on the building that you bought last year. Mm-hmm. But there are the biggest problem, Bill, and that's why they created the 421Gs. In 1994, when the Giuliani administration, you had these C and D buildings. I mean, now there are no more 421Gs, so you're not going to see the conversions. What's going to happen to these buildings? Can you see some of these buildings being demolished?
Well, a lot of these buildings, Michael, I mean, the incentives for residential conversion have run their course.
Correct.
We've seen over 12 to 13 million square feet of office space come out of the downtown market as office space and move to residential. Every building on the south side of Wall Street between the Stock Exchange or Broad Street going towards
Wall Street, I call residential street.
It's a residential street right now. No one believes
that's
it.
That's why we didn't convert our building to residential, because we figured if somebody wants to be on Wall Street with a commercial address, 110 Wall Street
and the water
is a viable alternative. But it's part of the evolution of downtown, which has been very, very positive and creates that 24/7, which we really didn't talk about. The whole, the residents helping attract the retailers, which are important for the commercial tenants. So those things we've been talking about 24/7 for a long time. It's now really happening.
Bill, I'm like the poster boy for Lower Manhattan. I've been there for a number of years, but now I just want to, there is Brooklyn. There are possible developments. Prior to, the week before, we did a show on Long Island City. In Long Island City today, you can go there and even get a better bargain in certain aspects. The United Nations Federal Credit Union is renting space at $42 a foot, which effectively goes to $26 because they get re-benefits because nobody was in Long Island City. Do you see some of these companies who could go to 32 Avenue of the Americas or some of your properties? You don't have much space available. Some of your space go to Brooklyn or to Jersey City. Matt Cowley, Lefrak, and the other guys are keen competitors.
It depends what a company's looking for, Michael. I mean, in Lower Manhattan, you're in a world-class business district. You've got, companies like Merrill Lynch, Goldman Sachs, Dow Jones, Deloitte Touche, headquartered right around the World Trade Center. Brooklyn and Long Island City have some great properties and some great opportunities, but downtown is still the financial capital of the world. The other thing that Bill was alluding to, which is right on, is that downtown has become an exciting place to young people to live and work in the last few years. And that's, I think, very different than it's been in the past. And finally, what you're seeing, I think, is the entire creative class that is driving the New York City economy, the knowledge workers, the people who are taking up space in office buildings, are gravitating towards Brooklyn and downtown, and to some extent New Jersey, as locations to live in. And those are more convenient to downtown for many people than to Midtown. So downtown, I think, is in a great position from all those standpoints.
But I mean, we are at, New Jersey is competition for us, and Brooklyn and Long Island, I don't look at it as competition. I look at it as part of the economic development tools that the city has to offer companies who want to expand and grow in New York City. And if they can't be accommodated in downtown or in Midtown, then Long Island City or Brooklyn or Queens, for that matter, are perfectly reasonable alternatives. We don't want them to go to New Jersey. We want them to stay in the city. But will we lose tenants to New Jersey? Of course. I mean, that is always going to happen. But I look at it that we're not really competing with New Jersey. We're competing with London. We're competing with Hong Kong. We're competing with Beijing. We're competing with Shanghai. All these other international cities that are trying to grow their economies and take advantage in terms of the explosion in the financial service markets.
Now, let's talk about the explosion. It's even before my time, and I know it's before your time. When the original Trade Center was built, they couldn't lease the space. I mean, the city has there's limited vacancy today, but can the city absorb all of the new buildings over there with, 7 by that time will be completely leased up. Okay, then you have the Freedom Tower, and then you have the others. Do you see the city being able to absorb all this, especially since maybe there's the Hudson Yards, some buildings going to be built in the Hudson Yards and other markets?
The Hudson Yards is a speculative development at this juncture, and that may take arms at that 5 or 6 years from now. But the Janos project and Larry's project, I think that unequivocally, that's every ounce of space will be leased. Every square foot will be leased. You have to understand the other incredible dynamic that occurred that Bill just spoke about is that you had, and Jana, you had true office product. Although some of it was a little tired, it served as competition. It served as the overall inventory. That's millions and millions of feet just taken away. And it's not these people who moved. Those are residential apartments that people are living. So those tenants are not going to be displaced, and if they are displaced, they have to live somewhere else.
No, but I'm talking about all this new space. How much? What's the square footage of the Freedom Tower and the other buildings?
8.6 million gross of office space.
Right. I'm only talking office.
Okay, just
our subject today is only office
space.
But a year ago, you would have said, "Well, how are we going to rent 7?" It's the same discussion.
Three years ago, you would have said you don't need it.
We need this inventory of Class A
No
space
question.
because we're going to lose companies because they won't have. They won't have the space that they need to grow their business. That's really important as we compete, not with, as I said before, with Jersey, but these other international cities. And the large companies, the Merrills and the Morgan Stanleys and the J.P. Morgans, they need large floor-plated, technologically sophisticated buildings for them to grow their business. And if they don't have it here, they'll go someplace else and create it.
But didn't that happen? That's why people went to Metro Tech? Wasn't that part of the problem?
That's mostly back office space in Metro Tech. We're talking about front office space, and that's why that what Larry and Jano have designed in the Trade Center are the buildings for the 21st century. They've got the infrastructure that these companies need on big sites with large floor plates. It's very, very important. And
a couple of weeks ago, I had Bruce Mosler, Jimmy Kuhn, and Steve Siegel, and we were talking about downtown, all positive advocates of downtown, but I think it was Jimmy who brought up this big problem that we have throughout the city. And I know Larry has one building like that where, nonprofits have a limited amount of money to spend. And they're getting out of the market. They have to live, but there isn't space. And even in downtown today, listening to that, I mean, are you renting to any nonprofits? What do you see?
There, at this juncture, I will tell you that the majority of the tenants that we're looking at are Midtown Transplants, some outcropping of growth of downtown tenants that just quite frankly can't fit in their current spaces, or we're growing our own tenant roster. But your denizens that were normally downtown, not-for-profits, yes, that is a challenge.
But we're talking about the nonprofits who are in Midtown,
right?
Who you just said. If you had, for example, I know that there was Seeds of Peace,
right?
Is maybe in your building. They're a nonprofit. A nonprofit. There's a 990. They have contributors, and contributors look at the numbers and they say, hey, for you to spend $90 a square foot, $70 a square foot.
They're at 370 Lexington. That's correct.
Right. So they don't have much space, but they need space.
Mm-hmm.
Okay, how do we do this? I mean, we did this with Larry with 120
Wall. Correct.
120
Wall Street.
Right, which was where you didn't pay taxes, nonprofits.
Right.
How do we take care of this problem that we have, this dilemma?
But that's why a Long Island City or Brooklyn or fringe areas of Manhattan will those opportunities will create themselves. And you asked the question before, what will happen is, you asked what's going to happen to these C buildings. Well, what will happen is these type of tenants will go to it, and the owners will be incentivized because they will have the cash flow to be able to renovate and put in the infrastructure and create the proper work environment. If a tenant's going to pay them low to mid 30s, and depending on what their basis is, they'll be able to put the money into the building and create the right space. So will some tenants not find space? Probably, but that's what happens in this in this
in the mid 90s. You were an innovator with a plug and play and 55 Broad. Okay, then the internet bubble, as you said, or 32 Avenue, the Americas, things take place. Let's forget the tragedy of 9/11. What happens if the economy doesn't really continue to grow like this? I mean, do you see any problems happening in downtown?
Well, I'll tell you, Michael, we're looking at, the way Larry looks at this World Trade Center and the whole downtown effort, which I have to tip my hat to Bill, who's been trying to make downtown a more exciting place to do business for a long time. But the way we look at it, this is a long-term project. And the reason Larry stuck with this through all of the public debate and some of the disagreements was that it was all real estate fundamentals. He said, New York needs brand new office space for its economy and for the companies who want to be here. And where else are there sites for first-class office buildings right next to that kind of transportation hub, period. That kind of thinking, which kept us in the Trade Center project through the thick and thin, also is about why this is going to make sense for the long run. In the long run, the site is going to make sense, and it's going to make sense for companies to come to New York because we have the workforce, we have the transportation. And those same reasons are going to continue for a long time.
Do you see the Freedom Tower being sold to a private investor?
I think it's a possibility. I mean, at the press conference, the governor, both governors, talked about that, and I think they'll have to do what they think makes sense. But I think they're moving forward now and building it and getting it going. And if somebody makes a proposal to them that lets them get some money out and go on and use that money for transportation projects, and it's a company or individual who's going to fulfill the obligations, then I don't see why that's not a possibility. But I think that that what is happening today downtown, you said we've been talking about this for a while. It's gratifying to see it happening, and it's gratifying to get the results that people appreciate all the hard work that all of us here and the mayor and the governor and Shelley Silver and Joe Bruno and everybody who's been involved in downtown. You create that foundation, and then all of a sudden you start seeing the building going up, and that's what's happening right now.
You know what's interesting? The one thing, and people like everybody knows Vornado. Whenever I've had people from Vornado on any of my shows, they don't love downtown. Tishman Speyer never loved downtown. I mean, these are companies, and I don't hear, and we were trying to say before the show a little bit about Issatar buying 280 Park Avenue. Do you see at one time perhaps these companies, these Kuwaitians or some of these others going in? I mean, you've been buying buildings over there, you look at buildings. Do you see those people perhaps saying, I want to own that trophy? That's why they bought 280 Park. Okay, it's a great building.
I think so. But one of the things we were internally talking about before the show is that the two fundamentals are, which is everybody knows, there's real estate, they're not making any more of it. And secondly, you truly have some absolutely gorgeous pieces of real estate in the Midtown sector that are ripe for the taking. 280 Park, for example, is a trophy buy. You can talk about the different vicissitudes of the transaction.
There are some trophy buys downtown.
No question. Some of us are going after them, some are not.
I mean,
right.
The World Financial Center is downtown.
Correct.
I mean, it's trophy property.
Look how smart they were. They bought the Lehman building at what $200 a foot, or that was the deal. That was an incredible deal. But they had to have vision and belief, and what's great about New York real estate is whether it's Vornado or Broad Street Development, or there are opportunities for everybody, and everybody has chooses where they want to if they want to play in it or not play in it. And some people do well, some people don't do well, some people that's the beauty of our economy. So
even though we're only talking about office today, to sum it up, I mean the combination of the Seven World and the future of the Freedom Tower and the other sites over there, the other A and B buildings, which you guys have built, the property that you've owned for years and that you've developed in 32, the combination of the Stone Street, which we always talk about, and the massive number of new hotels being built downtown, and all the residential is making downtown a great place to live and to work. And it's truly, with the transportation hub, it is truly becoming a 24/7 community. And I'm really happy that I've been able to have three guys today who can really live, love, and enjoy downtown New York and New York City. I'd like to thank Dan Blanco, principal at Broad Street Development, Bill Rudin Management, and last but definitely not least, Jano Lieber of the World Trade Center Development Corp., Larry Silverstein's properties, for being here today. Next week, I'm not sure what the show is about. I think it's about the hospitality industry. See you next week.
Major funding for this program is made possible by grants from HSH Nordbank New York Branch and First American Title Insurance Company of New York, Perfect Building Maintenance, Greenberg Traurig LP, the Moynihan Group. Additional funding for this program is made possible by grants from Antares Real Estate, Arbor Realty Trust, C.B. Richard Ellis, Cushman & Wakefield, Fremont Investment and Loan, Massey Knackle Realty Services, Muss Development LLC, Rosenthal & Rosenthal Inc., Signature Bank, Stonehenge Partners, Swig Equities, the Engel Berman Group, the Wyckoff Group, Titan Capital, YL Real Estate Developers.